Hello and welcome to the Oanda MarketPulse Market Snapshot. My name's Craig Erlam, Senior Market Analyst at Oanda. Now, as you can see, it's quite a light day in terms of key economic events. Of course, it is Thanksgiving bank holiday in the US, so typically trading is quite light. But the fact that we've had a lack of data as well from Europe means it's a very light day in terms of economic data. Now, we do have plenty to come from Japan later on this evening or in the early hours of the morning. We've got inflation data, unemployment data as well. So there is going to be a focal point potentially on this during the Asian session. But in terms of the European and US sessions, it's looking a bit light. So rather than focus too much on the fundamentals, I'm just going to move on to the charts and see if we can cover a few charts here. Now, the first one I've lined up is cable. Now, the reason why I've lined this up is because we are starting to see some kind of consolidation in the pair as we approach towards like this 150 level. You can see that the lows are around 150.25, which we hit back on the 6th of November, haven't really being tested yet, but there is reason to think that it may follow, because for me this looks more like consolidation as opposed to any potential bounce or bullish reversal. You can see here, if we just add a trend line, for example, this could potentially be maybe some form of pennant formation here. Like I say, the fact that we're seeing this consolidation, lower highs, higher lows being made, suggests to me that maybe this is just some form of consolidation, which, given the bearish move which followed it from last week through to this period of consolidation, is typically a bearish setup, which means we could see these lows being tested in cable, at which point we are looking back a little while to find the next levels of support or resistance. Really, I'm looking at this area here around 150. Big psychological level, of course, 150, and clearly it's got history. We can see it providing support here back in February and January, and then acting as resistance as well at this level here. So 150 is the next key level for me. Below here, we've got this previous support as well around 148.50, so a couple of levels to watch out for there. Next chart I wanted to highlight is WTI. Now again, we are seeing it struggle to break back above this previous area of support. Now you can see throughout this entire period of August to November, this area here between 42.10 and say 43.10, so around that $1 area. Now this was a big level of support for WTI, and it was the break of this which really brought about this substantial bearishness once again in WTI. Now, the reason why it's been heavily supported around this 39 level, 39.30. Now, clearly this was a previous level of support as well. You can see on the 4-hour chart, but it was more of a fundamental thing that drove is the reason why we saw a rebound in WTI. You can see here, as I mentioned, this was a previous level of resistance, which explains some way why it found support at this level. But also, like I say, there is a fundamental reason behind it. We did get those comments from Saudi Arabia, who said that they were now willing, after more than a year of oil prices falling, they were now willing to discuss with OPEC and non-OPEC members ways and means of finding some stabilization in the price. So clearly this is starting to affect their personal economy as well. They thought they could withstand it more than some of the other players in the world, the major oil players, particularly the US shale industry. What we've actually seen is production remains at these all-time high levels. Also, the containers that hold all this excess oil, they are now reaching capacity. So there is this issue that price could fall significantly more, maybe back towards $20 to $25 a barrel. So I think that's helping to support price at the moment, and we may see it find some form of trading range before that big OPEC meeting on the 4th of December. But it does seem to be finding strong resistance in that 42.30 to 42.10 to 43.10 region, which has been a key level of support previously. So we may see it move back towards this $40 a barrel and continue to trade within that range ahead of that meeting on the 4th of December. The next chart is euro dollar, and again we are seeing more pressure to the downside. We saw more lows being made yesterday as it broke back to 105.50. This was on speculation that the ECB is considering more unconventional measures ahead of this meeting on the 3rd of December. Now, the story that broke yesterday was they may the amount that the European Central Bank charges for big banks to hold cash on deposit could be staggered, and the more that they hold, the more they'll be charged. Again, just the ECB's attempts to really encourage lending in the European economy as opposed to hoarding cash on behalf of the banks. Now, we can see that these lower lows were made on the back of these reports, but again, there was just no momentum. So we're seeing these lower lows, marginal lower lows, and now we're finding support again, and yet momentum is still running out. So really, I do think we are finding a solid area of support here ahead of that ECB meeting. Now, of course, the ECB does have a knack of surprising the markets when it comes to the actual decision itself. They do tend to over-deliver, which could lead to further euro losses when they do meet next week. But for now, it looks as though we may have found a floor in the euro, at which point we may see some form of correction or consolidation, potentially between this 106 level or 105.50 and maybe around this 108 potentially over the next few days, or it may even stay at these lower bound of the range between 105.50 and 107. The Australian dollar is the next chart I wanted to highlight. Again, quite an interesting chart because we saw the break above this descending channel, which I've highlighted on a few videos now. Once again, this break just doesn't look convincing to me. We could potentially see, of course, if we does gain any upward momentum, we could see it maybe move back towards these highs around 73.89, 74, or even as high as 75.30 to 75.80. We've also got the 233-day simple moving average coming in here, but it just isn't gaining any momentum, just considering how big a breakout this potentially was. Now we said that it failed to gain momentum initially. We did see them break above the Friday's highs, which I suggested may be a sign that we're going to see more of a push to the upside, but immediately it's just run into resistance again. And what we've seen is, despite having this Maribozu candle, which can typically be bullish, although it is quite a small candle, we've seen a spinning top form, which suggests that there's a lack of real momentum, I guess, in the pair. It suggests that there's a lot of indecision. Now, today we are seeing it trade to the downside. We haven't seen it break above yesterday's highs. If we see a move around 2/3 of the way into this, into Tuesday's candle, this would leave us, and it closed, this would leave us with an evening star formation, a bearish reversal pattern. Now, what will be interesting then is if we see a move back below the 100-day simple moving average, which was a clear level of resistance on a number of occasions recently, and back into the descending channel. That would suggest to me that this is not as bullish as that initial breakout appeared. Finally, gold. Again, we are seeing consolidation around this support. We did see it break below these lows, but we are just seeing consolidation again in gold. And again, I do think we are going to see further decline in gold the closer we get to the Fed meeting. Of course, it does have that inverse relationship is still very much exist. If we see some more dollar strength ahead of the meeting, then I think we could see a move lower. But what I think is important here is that we are seeing these lower highs being made. Now, of course, we are seeing higher lows as well. But if we consider the move which preceded this, the fact that we are still seeing lower highs being made suggests there's still plenty of bearish pressure here. Now, of course, this is coming on falling momentum, which could potentially be a bullish signal or a sign that we are going to see some form of consolidation or correction ahead of that Fed meeting in the middle of December, which is entirely possible. But I think beyond that, we think we are going to see more of a move back towards maybe 1,025 or 1,000 in gold. But maybe we just have to be a little bit patient with this. For more in-depth news and analysis, check out Oanda MarketPulse at MarketPulse.com. You can also find out more about Oanda and sign up for a free demo account at Oanda.com. Here you'll also get access to Oanda for FX Labs, which has a lot of great tools aimed at helping you in your trading.